Starting tomorrow, the United States will implement reciprocal tariffs on other nations. It's been a long time since we even thought of that.
The fact that India is the Maharaja of tariffs, it's the highest tariffs in the world, charging on American products.
We therefore weren't doing much business with India, but they were doing business with us because we weren't charging them. Foolishly, we weren't charging them.
We are engaged, we remain engaged with the United States, and at this time, I can't say more than that.
Mr. President, this is Chandra Shrikant from India. Can you give us an update on the India-US trade deal?
First of all, I have great respect for your Prime Minister. He's a fantastic man and friend of mine. And we're going to have a good deal.
Since I arrived in India about a month ago, I have said, and I truly mean it, that the two leaders have a great personal relationship. And that is something that carried this deal forward.
I'm very hopeful of a very good deal with the United States.
What excitement, what drama, and absolute rocker of a night, I may say so. The trade deal getting announced. Nifty, historic open, 1,200 points higher. 1,000 points, 26,030. Nifty Bank, 23,050, which is 60,950.
A historic trade deal that has been inked between the India and United States. If you look at the reaction to that on the markets, it's phenomenal. In just the last 3 trading sessions from budget day lows, the Nifty's traveled over 1,300 points, and it's an all-green screen. There are weeks where nothing happens, and then there are days where everything happens. You're watching us here on Trading Hour. I'm Mangalam Malu. With me, as always, Ritu and Hormaz. Good morning, guys.
Good morning, Mangalam. And what a historic start it has been after that historic deal that we saw, and the markets continuing to trade on those gains. And we always talk about sector-specific stocks and stocks that are buzzing, but it's pretty much green throughout.
It's the entire sector that's buzzing, and sectors are buzzing. But the corporate conversations, of course, can't lose sight of the earnings season, and we continue with that first up.
We do that as well. So let's get across to Tarun Mehta, the co-founder and CEO of Aether Energy, joining in with what was a very healthy third quarter for the company operationally. We'll be discussing, obviously, the following talking points. One, visibility on margins, whether they turn positive or not, market share target by the end of this financial year, the next financial year, and the impact of higher commodity prices. Let's attack two of them. First up itself, thanks a lot for joining in, Tarun. It's been a phenomenal improvement that you've shown in your operating performance, where the losses have narrowed. The reported EBITDA margins are now just -3%. That's an over 1,500, 1,600 basis points improvement. While this has happened on account of increased volumes, improved market share, and increased productivity gains that you got as well, on the other hand, there is this risk of higher commodity prices that may impact your operational performance. So how do you balance these two? By when do you turn EBITDA positive, reported EBITDA positive, and are you taking any sort of price hikes?
Right. So thanks. Q3 was a great quarter for us. We saw a 50% growth in volumes. We saw 1,500 bips improvement in EBITDA. We also saw a good improvement in unit economics by almost 300 bips. This was honestly firing on all cylinders. Unit economics improved because we were able to improve our ASPs, because we were able to drive costs down. And operating leverage was there. We have roughly 4x our volume in the last 6 quarters. So that's kind of played out beautifully in the EBITDA journey. We've cautioned that there are some headwinds potential from commodities in the coming few quarters. And what we've done for that is obviously kept a lot of our engineering bandwidth focused towards cost reductions, but also keeping a tight control over our fixed costs. We want to fast track our journey towards break even as much as possible, so that even if we absorb all these blows, we land up at a better place and stay on a good path.
So by when do you break even?
Results.
By when do you break even?
Always difficult to say, and we don't give a guidance there, but we've gotten pretty close, and we intend to stay.
That's the worry, right? You've gotten pretty close, but the other side, the commodity prices have taken you far away from there. So with all things said and done, maybe, not a particular quarter or any sort of guidance, but any time in the next 3 or 4 quarters, is there visibility for you to break even?
So we got a few growth levers ahead of us. First, on price hikes, we took a 3,000 rupee price hike just at the start of Q4 itself. That's with the intention of absorbing some of the potential commodity hits here. I think that'll go a long way. We have further cost reductions coming our way. The biggest one ahead of us this year is coming from a transition to the low-cost scooter platform, the EL scooter platform. So between both of these, we expect a lot of gains ahead of us. So we think we should be well positioned to absorb these hits. Thirdly, our software contribution and our non-vehicle revenues have been on a tear. So we had almost 14% of our revenue coming from non-vehicle sources, a large majority of that coming from software sales. So that's continuing to support our P&L massively. And we think this trend will likely continue, given what we have seen in newer markets, particularly the northern markets, where the trends have been very encouraging.
Right. So just two questions before we let you go. A two-part question. You can give us numbers. One, your market share by the end of this year, where does it stand? It's about 18.8% right now. What's your target there? And by the end of FY27? And non-vehicle revenues, which is about 13%. You said directionally that is increasing. So from about 13%, where does that go on your market share? And, your non-vehicle revenues, if you could give us three quick numbers.
So market share, think of this as two different parts of the country. In South, we've been consolidating at 25% market share now for several quarters. And with the current portfolio, we are pretty confident of this. In the rest of the geos, we believe our fair market share lies around 20%, and we've been moving towards that every quarter. So a 20%-ish, 20% plus kind of a market share is our near-term expectation. And on the other question was around
non-vehicle revenue.
Non-vehicle revenue. So that's compounding really well. So there are two parts. Software sales, we've been able to hike prices of a software also consecutively over every year. But service revenues are compounding in nature, given the fleet size. We believe in steady state, there is a 3 to 4% potential improvement from this source. So the current 14% could compound to 17, 18% over the next few years, driving a lot of margin gains for the business.
Tarun, thank you so much for sparing time and joining us today. Wish you good luck for the rest of the quarters as well. The management there of Aether Energy. But of course, the big talking point, of course, the US trade deal and the impact on these export-oriented names, particularly the textile stocks. You look at Gokaldas, Indocount, all of them trading with gains of anywhere between 15 to 20%, and they are holding on to those gains. The one important factor is the fact that despite the fall that these stocks had seen, now this is as of yesterday's closing, from the 2nd of April when these reciprocal tariffs were first announced, these stocks were down anywhere between 10 to 30%. Now comes the deal. The deal will now bring down tariffs to 18%. This is better than the other export-oriented names, Vietnam and Bangladesh, which are still taxed at 20%. India will be taxed at 18%. So it's a positive for all of these textile companies. Now, the story here is that despite the fall that these stocks saw, despite all of these headwinds, retail investors chose to stick around. And if you look at the shareholding patterns as well for all of these companies, most of these shareholding patterns show that the retail shareholding from the March quarter of 2025 to the December quarter of 2025 has only seen an increase, be it Gokaldas Exports, be it Welspun Living, be it Indocount, or be it Arvind. All of them have seen an increase in their shareholding patterns. And there you can see. And even Avanti Feeds, of course, the shrimp manufacturer is included in this as well. That is the one outlier. But other than that, it's mostly seen an increase. Now, if you take a look at the mutual funds as well, they too have chosen to stick around these stocks. Gokaldas is a very heavily fund-owned name. Now, from 30% in March, that shareholding has increased to 35% at the end of the December quarter. And for most other names too, barring Avanti Feeds, the shareholding has only increased, even if it is for the mutual funds. Now, that is the bit that the patience is being rewarded, yes, but there's still a long way to go for these names, because despite the recovery that you are seeing today, all of these names are still down significantly from their record high levels, which was either towards the end of 2024 or the start of 2025. Gokaldas is still down 55%. This is as of yesterday's closing, of course. Welspun's down 43%, Indocount is down almost 50% as well, and Arvind too is down close to 30%. So as of now, the patience is getting rewarded, but still there is a long way to go for a lot of these shareholders.
Yes, the patience is getting rewarded for these investors that stayed put through all of that uncertainty. But let's bring in market experts to get a check of where we go from here after the historic open we've seen and the record rally. Rohit Srivastav and Neeraj Sheth, founder and CIO, 3R Investment Management, are with us now. Rohit, what a historic opening we've had. Where do we go from here? Give us your near-term targets.
So, while it may look pretty rosy to start with, I think we would want to give it some time to see whether the market can really sustain the big one-day swing. Like what we've seen it do is it's opened higher, but it's sold off during the day. And in the process, we did not get past the January high, which was at 26373. So that does keep odds open that, even if the market just stays at the current level for 2-3 days and we are not able to get past that high, that we may sell off again. Now, this is a risk to keep in mind. On the other hand, if we say that, okay, the markets are going to go higher, make a new high, are we ready for a runaway move? So then I would cap a new high at probably 26,650. That is my best case scenario right now, if at all we do that. But not the preferred scenario. So that's an alternate that we'll keep in mind that, okay, if it does happen, a lot of buying comes in, then okay, we can go till there. But the setup as of now, today morning, remains that we did not cross that high. We sold off from there, and the risk is still open to the downside, though we may stay at the current level for a day or two because of the underlying event.
Rohit, you mentioned there is a risk, but you need to cross specific levels. That's for the Nifty. But the Nifty Bank has been the bigger worry, right? From record high levels, it sold off almost 2,000 points. Now it is back at those levels as well. Has that chart structure dramatically changed after this one-day move, or does it show a similar risk as to what you see for the Nifty chart as well?
So unfortunately, it also keeps something open. We also call this an inter-market divergence where, one index does not confirm with others because we haven't seen a new high in mid-cap, small-cap indices, which have only retraced 61 to 70% of the fall that they had seen. So they've actually done far more poorly. I would put a level to watch close to around 60,000, and above that maybe around 60,700 for the Bank Nifty. So these are two key levels above which we would have to sustain to, be able to say that, okay, Bank Nifty is doing something new or something fresh. Otherwise, it would still be just part of what has been going on because we are in the same range we were in December, just a little bit higher or lower.
All right. Neeraj, quickly, your view as well on how you see the markets moving in the near term, whether we can sustain that rally. Rohit was saying we still not hit the Jan 5th highs that we had seen.
So I'm a little more optimistic. Yes, caution is warranted for sure. But at the same time, if you take a step back and look around the broader factors, so the fundamentals, obviously you have a growth impulse that comes from the trade deal. You have a balance of payment, rupee stability. The only negative is RBI might go on a pause. But alongside that, from a global markets perspective, you're starting to see a little bit of volatility in the AI trade, the volatility in gold, and the drop in the gold price in the last 3 trading sessions, the oil price decline. So there are a lot of different factors which I would argue have started to turn the technicals for the Indian market. So would it run away from here? I'm not sure, but at least we are in a more positive technical backdrop given the broader factors that are at play today.
And, Neeraj, of course, the bigger question about whether the foreign money comes back to India after, the kind of year that we've seen. And, the next cue from here, Friday, RBI, will announce its monetary policy. What are you expecting from there as well?
So on the FPI side, I do think this at least is the beginning of the pause of FPI selling. And then if the markets continue to perform and we see some revisions or upgrade in earning projections on the back of the better fundamentals, I do think the FPI turn will happen. On the RBI front, given the backdrop, I would expect RBI to go on a pause for at least now and see how it goes before there's more monetary accommodation is provided to the economy.
Rohit, as Neeraj was also highlighting with regards to gold and silver, do you believe that the top is being made for both of them, at least for now, especially considering the volatility that you're seeing in prices, 10% up today, 10% down tomorrow?
More than at least for now is what I believe. The way gold and silver ran up through January has completely changed the outlook that we have for the next 1 to 2 years. So if you ask me this question in December, I would have said, yeah, you'll get a correction, but it's just going to be temporary. At the most, you get 6 months of underperformance and things could pick up. The parabolic rise of gold and silver in January put them at extremes in terms of their market sentiment, their technical readings that have only been seen at major tops that are often not surpassed for 2 to 3 years. So therefore, what I'm really looking at is a long period of underperformance as far as precious metals are concerned. And I think that is going to have a rub off on other parts as well. I know there are hopes that, PMs cool off and then we continue to see the base metals pick up, but the entire base metal rally was actually on the back of precious metals. And you don't have an oil market rally yet. So broadly speaking, the whole idea that you are in a commodity bull run, I think is becoming questionable till we get seriously new proof. The bigger rundown to that entire argument would be the dollar itself. I think people got overly pessimistic on the dollar. And that also shows up in the data. The CFTC data was showing one of the largest short positions by non-commercial traders going into the end of Jan. And that has set us up for what we are calling now a dollar rally, or the potential that we've actually turned around or are in the early stages of turning around as far as the dollar is concerned. So we saw a glimpse of that, I think, on Friday and probably a bit yesterday. But it may be something that will continue. In fact, that itself could actually cool off what we've seen as a, not just a precious metals rally, but also an emerging market rally, because the last 12 months have seen spectacular outperformance of emerging markets relative to the US. I know India did not participate in that, and we would really love that happened now that the trade deal is through. But that trade is at its fag end, and we would have to do very quick catch up to really make up for that. Otherwise, we'll just be left, holding the bag over here.
All right. Neeraj and Rohit, thanks very much for joining in with that. Appreciate your views and your time here. We have to slip into a short break on that note, but more on the markets when we return. Welcome back. Time to get you a quick check on the macro signals of the day. The markets opened 1,200 points higher, now trading with gains of about 700 points as we speak. The Bank Nifty stays above 60,000, trading with gains of about 1,560 points. That's the markets for you after that historic trade deal was announced. But apart from the markets, the biggest impact that we've seen is also on the rupee. That is appreciated by 1.25 percentage points, now trading at 90.37 compared to yesterday's close of about 91.52 to the dollar. So a lot of, move on the rupee if you compare it with some of the Asian peers. Yes, year to date, or rather, from the time that the tariffs were announced in April last year, it is the worst performing Asian currency. It lost 2% this year. But then again, today alone, we made that gain of more than 1%. And going ahead, if you look at the ranges that various, people have on the street, anywhere from 88 to 89, which BNP Paribas has, one of the lowest in the street, 88, 89 to the dollar. From SBI all the way to 90.92 from Goldman Sachs. So that's the near-term levels that the street will be looking out for as far as the rupee is concerned. Oil prices, take a look at that. They're also stable. They're noting the impact of production hike being halted from the next month. And of course, Iran and US, that continues to weigh on sentiments. Apart from that, the 10-year yield, now that is going to take its next cues from the RBI policy that comes up on Friday. Currently, slightly lower. You have the 10-year at about 6.725. That's where we're at.
All right, those are the macro signals. Let's get you a CNBC TV 18 exclusive. Speaking to Network 18, Editor-in-Chief Rahul Joshi, Finance Minister, spoke about easing China FDI rules and all the macros. Listen in.
India's trade deficit with China is greater than about $116 billion in 2025. Even though the exports have also gone up, how do you tackle this issue?
That is where I think we are very clear in Atmanirbhar Bharat. We need to have capacities built in India for those essential goods that we import and make sure that we are able to make it in India for Indian market. Even as I say this, we have not restricted the imports of some of the critical machines or equipments or some raw materials which are so important for our industries. So capacities will have to grow, but in the meanwhile you still need, for those very same capacities, imported equipments. So we are doing a fine balancing act in not denying the raw material coming or the equipment coming, because there are some precision tools which you so need when you're going to set up a particular type of factory. We need those to come in here. Sorry. But at the same time, capacities in India will have to be expanded, ramped up sooner, so that our dependencies can come down. But this story is one side of the coin.
Right.
The other side of the coin is market access in China. I was Commerce Minister, and I know in my time also we've been asking for greater market access for Indian goods.
Right, in China.
That is moving very slowly.
So now that the relationship with China is improving, would you consider relaxing restrictions on investments by China through Press Note 3? That would really take the relationship to the next level.
Well, some discussions were happening. I'm not sure where it has reached as yet. Once we arrive at something, I'll be able to expand on it.
Sure.
All right, and if you look at the trends coming in from the F&O space, a solid day of gains. Nifty Bank, Mid-Cap Index, all of them sitting with good gains. One would argue that they're not at the highs of the morning, but well, their excesses are out from the morning. And right now, the kind of short positions that are built up will be very interesting to see where the second half of trade will be, because it's Tuesday today. It is also the weekly options expiry. Advance decline firmly in favor of advances. All the portfolios looking wonderful. And, just the budget day low of 24,571 seems so far away. It was just about a session and a half away. If you look at Sunday afternoon, that's where the market hit those levels. So from there, it's been a big gain. The Nifty's crossed the 200, the 20-day moving average as well, and currently very close to the 50-day moving average of 25,829. The FIIs, they are 88% short in index futures. And as we speak, this was as of yesterday, as we speak, both the Nifty and the Nifty Bank futures have seen massive short covering. The open interest is down. So today's data will be extremely crucial. What we have right now, on our screens is the 25,500 call, the 25,400 call, and the 25,300 call. All of them seeing shorts being caught on the wrong side, and as a result of which there is massive short covering. So those options come up for you on the screen. You would see there is short covering. So just watch out for the data today. Post-market will be extremely crucial to determine where, all the options and the futures writers have been stuck. Take a short break. Come back. On the other side, the management of Akzo Nobel joins in. Markets continue to do well, but we also have a bunch of numbers to address. Akzo Nobel shares trading flat after posting a muted set of third quarter earnings. But importantly, if you adjust for the change in the base quarter, you would see that there was a mild growth in their overall performance. Rajiv Rajgopal, who's the CMD, joins us now. Rajiv, thank you so much for joining in. 3 questions. At what level has the integration completed? What's your target revenue and market share and competitive intensity? Go ahead.
Good to meet you and great to be on your show, Mangalam. Thank you so much for having me. I just want to correct that I've got redesignated as the Joint Managing Director and CEO.
Wonderful, yes.
And our chairman is Parth Jindal, and we had our first board meeting under his aegis yesterday. Delighted to be a part of the JSW group. I think me and my team are really now looking forward to being a part of the family and now really getting, I think, the sort of support that we need to win in India. So that's the first. On your question on, what's the targeted market share, how's the integration going? These are very early days. I think I'll leave that for a little longer discussion because at a high level, I think the integration has started going very well. I think, but yet the two teams are running differently. We being a listed entity, we have to make sure that we are within the framework of the rules to operate. And hence, making sure that we keep everything at arm's length is one of the considerations that we have to look at. Nevertheless, in our journey, if you look at the last 3-4 quarters, from the moment that the announcement happened in June, where we had a bit of a depressed quarter, to now, we really started moving from a slight, what I would call relative underperformance, to now catching up with industry growth. And I'm keeping my fingers crossed and fairly confident of the days ahead. In terms of specific actions, I think decorative paints, as you mentioned, we saw 2% growth. you've got to look at like to like, because you've got to take out the powder coating and IRC business, which got moved out, and also a couple of customers which have gone back to the unlisted Akzo Nobel powder coating entity. And when you net that off, we had about a 2% revenue growth with about a 8% sort of volume growth, 6% overall for paints and coatings. And I'm fairly confident that, now we are back onto the trajectory that we wanted to be. We've started seeing very strong volume growths. Three things we've done. First, we've looked at, pricing very carefully and used basically techniques like conjoint analysis to compare ourselves versus our competitors at a market operating price level, and made sure that we were slightly having significant premiums. We corrected a bit to make sure that we get, back to our consumer base. Second, we are obviously focusing on innovation to drive brand. And third, of course, we continue to drive distribution in our decorative business. In our coatings business, we've started tying up with marquee brands, including JSW-MG, to make sure that we get a lion's share of the entire aftermarket. In our marine and protective and our industrial coating business, we had some challenges in our marine business. We've started getting back to growth, and I'm fairly sure that we've got a robust quarter as we move forward to the current quarter.
Quickly, Mr. Rajgopal, when does the merger with JSW Paints, when does that complete? An exact timeline? And the name change, how quickly do we expect that, and what will that be?
So first and foremost, as far as the name change is concerned, we've given it to the minority shareholders. We should complete the voting process in the first week of March. It's a lovely name, JSW Dulux. So once that is done, then we start moving in. As far as mergers are concerned, currently the two entities will run for a period of time separately. We'll come back to you with finer details as we progress ahead.
Take that point. Always a pleasure speaking with you. A short conversation, effective one, but we'll have a longer one on the competitive intensity and the way you plan to take your premium market share going forward as well. Rajiv, always a pleasure speaking with you. Take a short break, come back, more on the markets on the other side.
Welcome back. Still 750 points higher on the Nifty, and almost 15 odd stocks on the BSE small cap index are currently in a 20% upper circuit as we speak, including Gokaldas Exports, Indo Count, Kitex Garments, Avalon Technologies. All of them having sensitives to the India-US trade deal are in a 20% upper circuit as we speak. What is not in an upper circuit though is Mahindra Life. That is bucking the trend in today's session, down around 4% as an earnings reaction. Another earnings reaction is Utkarsh Small Finance Bank. That too is down around 3% as we speak. And just pull up AWL Agri. Numbers were flashing just a few minutes earlier at the bottom of your screen, just to show if there is a stock reaction to that result announcement. Barely anything. It's still just around 1% higher for AWL Agri. So at least these are some of the names that are not doing very well. And PB Fintech has now become the top loser on the Nifty 500, down around 4.5% at this point of time. And Intellect Design losses for around third straight day, still 2.5% lower after the 2-day sell-off. Now take a short break, back with more on the other side.
Hello and welcome to CNBC TV 18. We're tracking the outcome of the big conversation between Prime Minister Modi and President Trump. This deal has gone to President Trump's table at least 5 times in the last 1 year. He was the man. He was the chief negotiator in these trade talks, and finally he has signed off on the deal. While an in-principle agreement has been reached, the final modalities will now take place and the deal will have to be documented and notified. Let me now go across to former Foreign Secretary Kanwal Sibal, who has been looking at this issue very closely over the last 1 year. Ambassador Sibal, Donald Trump says India has agreed to buy Russian oil. Our purchases of Russian oil have come down from an all-time high of 45% in our crude basket to 20% in the month of January. It could go down further, but will we completely stop buying Russian oil, as Donald Trump is saying?
Well, I don't think so. Of course, the Reliance has ceased buying Russian oil, and the sanctions are there on the other project that in which the Russians have invested. They have also stopped buying Russian oil. But the Russian oil which is sold on the spot market by Russian companies which are not under sanctions, can still be bought if the price is right, if the discount is attractive. So I don't think it'll go down to zero, but certainly it has declined and can decline further. Now, Trump has to say this because he has to justify why he has suddenly announced this deal. But in the post that he has put on Truth Social, he talks about reducing the 25% reciprocal tariffs to 18%, but he's silent on the punitive 25% additional tariffs on.
So, Ambassador, on that, we've got a confirmation from the US Embassy. In fact, the spokesperson of the US Embassy has gone on record to say that I can confirm that the overall tariffs come down to 18%. So, if it was 50, 25 plus 25, it'll come down to 18%. What I would like to ask you, do you think India's red lines on agriculture would have been respected? Because here you have Donald Trump tweeting to say that India has agreed to buy American at a much higher level in addition to over $500 billion of US energy, technology, agriculture, coal and many other products. Do you think these will be only niche agriculture items, or we could have probably given in some concessions on wheat, rice, maize for that matter?
My understanding is that some minor concessions had already been offered on select agricultural products, some based on quotas. So that is already part of the deal, but these are very small and they don't touch the core of our red lines with regard to agriculture and dairy and the interests of our fishermen, etc., etc. So I think Trump is now trying to make himself look good because in order to justify what he's done, which is welcome, of course, he has to show that he succeeded, that his tactics of deal making by imposing punitive tariffs have worked even in the case of India. As you remember, in the case of Korea and Japan and the EU, he announced massive amounts of purchase by these countries or investments. And in the case of EU, $750 billion of investments and buying American oil and gas and things like that. So in this case, he's also mentioned $500 billion, but he's covered it up by saying, the variety of things that you mentioned, which includes technology and energy and coal and agriculture products.
Ambassador Sibal, my final question before we wrap this, what do you think finally got us across the finish line? This deal has gone to Trump's table 5 times last year. Trump wanted a conversation with Prime Minister Modi. He has been speaking to Trump as well. But what do you think finally got us across the finish line?
The India-EU deal, definitely. Because he was using Trump tariffs as a weapon. But what did the Europeans do with India? Reduce tariffs, just the opposite strategy. And I know that the American companies, including the defense companies, were feeling very worried that the relationship was going downhill and it was affecting their business in India. And they wanted this deal to be wrapped up. So the whole thing was becoming untenable. And after this massive India-EU deal, he had no ground left to deny India this deal because his tactics were not working anymore. And we had signed a deal with the EU, with the UK, and we were negotiating more deals with other countries. So the entire, it was quite clear that India was not succumbing to these pressure tactics. And therefore, it was a losing game. And finally, Trump has retreated, but he has retreated in a way where he wants to make himself look good. And therefore, he has unilaterally announced some concessions by India, which I'm sure, and I'm quite convinced when actually the details are announced, it will not be what he has said.
All right. Thank you very much, Ambassador Sibal, for joining us with that great perspective. We're going to take a short break. Lots more on CNBC TV 18.
Well, still 25,850, 2,270 stocks advancing on the index and 270 stocks declining. There are some that are still bucking the trend in a market like today, but we'll leave that to the team of Halftime Report to tell you which are those names. Ritu Mangalam and I take your leave. Thank you so much for watching, and news and updates continue.